Hello guys, and welcome to the trade recap for Monday 21st of April 2025. If you haven't checked out my detailed strategy and mechanical entry models, I would suggest you please go ahead and check that out. That video is all time-stamped, so you can directly go to the mechanical entry models and look at that, because I'll be talking about those in this session today. So if I were to look at London Open today, and this is the zone that I trade for 2 hours at London, and I have marked a red box around it because I want to trade the range of this candle. So when I came into the charts, what I saw was that you had a nice little sweep of the equal lows and then a very strong close bullish. This was just 15 minutes before London Open, so I said, you know what, I'm going to mark that up, and then with London Open, if my entry criteria sets up, I'm going to take this long. So this is on the 1 minute chart that I've marked here. And please follow my cursor crosshairs both on the 15 minute and the 1 minute, because I want to look at, because I want to catch the wick of the next 15-minute candle. So if I go at the start of the initial 15-minute, which is this candle here, let me zoom that in for you. So this candle here. So if I were to start from here, which is the start of this red box, and follow through all the way till I hit the next candle, which is at 11, exactly when London opens, Dubai time, obviously. What do I notice? So there was a pullback, a strong pull forward, right? I could have taken a trade there and then put my stop loss here. So this would have been one entry. Let me mark that, guys, for you guys. So this would have been a nice little entry, and we could have taken it all the way up, and you can see the range, right? So it went all the way up. I'm looking to see if there was another opportunity there or a liquidation. No, so there was no liquidation. All it did was it tapped into this little into this demand zone and had a strong reaction from it. That was enough for me to take a trade. So that was one setup. If you had missed that original setup, you can keep this marked as is. The price went up, rolled all the way back, tapped it again, and had a strong reaction. That could have been your entry number 2 right there. And you could have either gone below here or below here or below this wick on that same candle, and that would have increased your risk to reward as so. So that was your second entry. I'm going to delete that. And the third entry for me would be here, and I'll explain how that would be an entry. At the breakout of this, and then I would put my stop at the structural low here, and that would have been a third entry. 3 entries all within the same candle, logically driven, not just any place that I see a strong bullish candle comes in, but logically driven. Now, how would I, so the first entry over here was my EM2 entry, just a strong reaction. The second entry that I had over here was an EM1 plus EM2, because we are getting a strong reaction from the demand zone. And then we also grabbed some level of liquidity over here, even though it was not a strong liquidity that I would like, but it is a structural low of some sort. So it took that liquidity and then had a strong push. So EM1 plus EM2 over here. And then EM3, why would I have this as EM3? EM3 is what? Failed reaction. So if I were to take this as a demand zone, it goes into a supply as such over here. Let me push that up here. It had a reaction, yeah? And this was the new demand that was created, right? So it went up in here. It had a reaction, came back into this demand zone, and then had a reaction after that, a strong reaction. So I said, let me take at the breakout of this reaction candle, right? So if it's going to pull back, it's going to immediately pull back. And if my structure breaks from here, here, then obviously I'm on the wrong side of the market. But if I'm on the right side of the market, structurally, this should be a strong low. At the reaction of this, if the candle breaks out of this candle, which would be a failed reaction to this supply, it had a reaction, and it should have broken this demand in order for it to go down. It had a reaction, came into demand, and demand had a strong reaction. And if I were to place my entry as a stop order on top of that, that would have given me a nice trade there. Okay, so there were 3 trades, all logically done in the first 15 minutes of London Open. Let me take this all out also. After that, what happens? So this is the next trade that I'm looking at. So if I were to mark out my candle as such right there, what do we have here? So we have again broken internal 1 minute trend. It is upward trending. You're creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. It did not break this low, so the trade is valid for me. And we are going to see when does the next candle start. So this is 11:15. This is where the next candle starts. What happens here? This is the demand. Yes, price comes in over here. And at this point in time, you can also look at this as supply, right? So price reacted from the supply. It came into this demand. This wasn't a strong finish for me. And then it's struggling to create a lower low. And the last candle before that upthrust candle over here, the last candle, even though it's a pretty small one, closed higher. I'm not talking about the wicks, closed higher than the body of this tiny bearish candle. So if it's closing higher, I'm thinking to myself, let me again take a trade at the breakout, right? So if I were to do this as such, what will happen is that if this reaction was strong enough to change the direction of the market, meaning it'll break this demand and then it'll break this low over here, I'm on the wrong side of the market. But if this supply is giving a reaction, which it rightly should, goes into the demand, and then demand has a strong push with that wick that you see, and it's constantly pushing higher. It's creating higher high, higher lows, higher high, higher lows, higher high. It took liquidity right there. So this little thing, these lows over here, they are trendline liquidity on a smaller time frame. So it took all of that liquidity and closed bullish. So I'm giving myself some breathing room. I don't want to enter on this candle, even though I could at the breakout of this, but I took an entry as a breakout on the highest point over here, and then put my stop loss at the structural low, 3.5 pips entry. And that, my friends, could have been an easy long winner, right? So, I mean, you see the trend over here, it's jumping. Okay, so let me delete this. And let's look at once this candle finishes, the next candle printed, very strong bullish, body close over this structure over here. The next candle, I'm anticipating that it will mitigate something in this original thrust candle, and this candle, and then it will keep shooting upwards. So let's look at that. I've already placed a box around this. So this started at 11:30, so I'm looking at an 11:45 candle right here, which coincides from the starting of the next candle. So if I put this out, this is the candle that I am studying for an entry on the wick of this candle. So if I come over here, this is where the wick of the next candle starts. It goes up, goes lower. It does not meet the demand in this case. It barely touches it and it flies. So there could have been an entry with my method of training as such, and below this would have been a loss clearly, but then I would definitely have entered again. And the reason why I say this is because after that it has a nice deep mitigation into that demand zone. It had liquidity taken, and this is a strong low because this low broke this high. So if you study the high of this wick, stretch across this wick over here, broke this high. And this high was generated from this low. So this is strong liquidity. It grabbed that, touched into the demand zone, pushed higher, and then I would have taken an entry because of my liquidation with my EM1, which is a liquidation into the demand zone. I would have taken an entry like this, and this would have been a fantastic win. And it would have rallied all the way up here. Yeah. So we had 4 entries, 3 over here in just this candle, and 1 over here. And the other reason I want to highlight why I really like this zone is because it swept liquidity and closed higher, right? So if it had swept and closed below, that would not have been sweeping. That would have been a change of character because it is breaking the lows now of the previous candles. Even though it's on 1 minute, on a smaller time frame into the seconds, it would have been downtrending. But in this case, it took liquidity, took this low out, took liquidity, and then closed higher. That is why I was interested in the zone, and it nicely tapped in and moved away from it. So there you go, guys. If you were just trading like me, 2 hours, so 1, 2, 3, 4, 5, 6, 7, 8, 4 trades. 8 hour for today, just in 15:30, 1 hour off London Open. Enjoy, guys. Bye bye.